Hi everyone, welcome to the Mighty Trades channel. My name is Johar and welcome to another episode of our weekend analysis series. So we are going to be diving straight into the market, looking at all the stocks listed on the National Stock Exchange and trying to find trading opportunities. Just a slight disclaimer, please view this video for education purposes only. Do not take any trades as per my advice. Please do your own due diligence before you take any trades. So let's not waste any further time and dive right into it. So we concluded the last episode with Vedanta Limited. So now we'll start with Pidilite. And if we look at the long-term chart here on a weekly candle, this stock has been on a secular uptrend since 2013, right? So this is not a trading stock. This is an investing stock. It's currently corrected quite a bit from its top and it's trading at a good support level. So if you're a long-term investor, I think this is the perfect time to, buy the stock right now. If you look at DIVISLABs, let's see. This stock has also been on an uptrend since 2017 May. It's been on a continuous rise and it's corrected quite a bit. It's showing some signs of stability over here. I do not see any trading opportunity per se. You could buy this though for a long-term investment and accumulate the stock, but there's no trading opportunity. NTPC, again, no momentum whatsoever. It's been trading at the same price. It's trading at the same price it is right now since 2007. So nothing really happening here. Let's go back to our weekly chart. SBILIFE, again, don't see any momentum. Let's look at moving averages. Okay, it's currently taking, it's below its 150-day moving average. The 200-day moving average is currently uptrending and it's above that. But again, I don't see any good trading opportunity here. ZOMATO, we are going to avoid. Clearly, there's a very deep correction that's coming in. And, with all the tech stocks that are correcting right now in the US, it will also affect tech stocks listed here. So it's better to avoid this at this point. Let's look at HINDALCO. Wow, okay. So HINDALCO has been on a super bull run um, since the COVID pandemic, right? And this bull run was long overdue because the stock was consolidating in this price range since 2007. So this was a massive bull run that was long overdue in a stock like Hindalco. And it looks like it's showing some strength right now because it's very close to its breakout point. There is no clear definitive target that you can ascertain, but this is a pure momentum play. No, I think this bull run is going to continue for a very long time in a stock like Hindalco, which has a 10-year long consolidation behind it. So if you are willing to, buy the stock and hold it for 1 year, 2 years, I think you can make a pretty good return on this. So we are going to add this to our positions tracker. And if I have the funds, I will also probably try and add this stock in my own portfolio as well. So I'm gonna put today's date as the date of identification. This is the date we identified the trade. Again, there's not going to be any target for the stock because it's in a very long multi-year bull run, which I believe has started in the stock. All right, the price today is 525. So 10-year consolidation behind bull run. Can go for long multi-year holding. So what I've written down here is that there is a very long 10-year consolidation behind this. rally, and you can hold it for more than 6 months to 1 year, to really reap the rewards of this stock. And our ideal stop loss in this case would not be a specific price point, but we'll have to find a way to trail the stop loss. So if I look at moving averages, from what I see here is it very rarely has stayed below the 50-day moving average over the last 2 years. And the 100-day moving average, it has only touched like once, twice, and 3 times it's touched the 100-day moving average. So I think the appropriate stop loss for us at this point would be the 100-day moving average. So if this stock gives a closing below 475 rupees, then that would be the time to exit. And as long as it stays above the 100-day moving average, I think is a good stop loss for us. That would be our trailing stop loss in this case. So I'm not putting any particular stop loss at this point, or maybe I just might. The target, very, very difficult to say for me at this point, but let's try and see if we can use fib retracement to get a target here. So our first target looks like it's 615 rupees, and our second target looks like it's 736. So again, these targets we're just putting for our own tracking purposes. I do plan to hold this for much, much longer if I enter into this trade. So if we look at the potential gain, as per the first target, it's 15%. The stop loss, as we said, was 475 rupees. So the potential loss is 10%. So not a really good risk to reward ratio here. But again, we are looking at this from a larger time frame, right? We are not looking for a 600 rupee target. I ideally would be looking at least a 730 rupees target over here. You know what? Why don't we try and look at some ideas on TradingView around this stock to see what other people have identified? Because I'm sure there are a lot of other traders much better than me out there. Okay, let's see what this lady has put here. Sheetal Udeshi. Alright, so ascendant triangle breakout above 522, consolidation panel channel. So she has also kept a target of 550 and 635, which is very close to our target. So it's a nice short-term trade. And she hasn't mentioned any stop loss though, which is okay. Let's see if someone else has added any targets here. Okay. Okay, someone seems to have identified a cup with handle formation. This is a tilted cup with handle formation right here. And the target is again 530, 547 as a positional target. Okay. This person has also identified 550 as the positional target. Okay. All right. So I think, yeah, 600 looks like a decent target. I do not believe, I think the risk to reward ratio is very good. I mean, if you're going for 600 rupees, then the risk to reward ratio is not that great. But if you were to potentially hold this stock for 736, then your potential gain is 40%. So yeah, I'm going to keep my target as 736. 600 rupees is not that appealing to me personally. So we are going to mark this trade as active. I am going to attempt to add the stock within the next week. And I'm going to keep my buy date for tomorrow. Okay. Alright, so that was my view on Hindalco. Let's move on to the next chart, which is Grasim. Okay. Okay, so it's consolidating at its all-time high price. Don't see any definitive trend as such. Let's try and connect all these bottoms to see if we can find some sort of a channel. Let's switch over to the weekly chart. Okay, so this looks like a respectable support line that we are seeing here, and we can stretch it out to all the way here. Yeah, so since the last 1 year it's been respecting this support line, and if we draw a channel this way, all right. So if you were to buy this stock, let's say if this stock were to come to the bottom of this channel, then you could aim for a target to the top of this channel. Now again, this is just a 23% gain, so I'm not really interested in those sort of trades. I like taking trades where the potential for gain is 40% and above. That's what really excites me. And the name of the channel is Mighty Trades. We are here to take trades where we can make big gains, because we want to take very few trades as possible, and we want to take big gains with good risk to reward ratios. As I'm a weekend investor because I'm doing my full-time job, so I want to take trades where I can hold them for a couple of weeks or months without having to look at the market every day. So this doesn't really excite me, so I'm going to skip this. But if someone out there does want to take the trade, then this is potentially what I would aim for. I would try and buy this as close to this channel as possible, and then try and sell this at the top of the channel. So if we look at moving averages over here, it's trading above its 150-day moving average, and it's very close to its 200-day moving average. So clearly this trend line is a very good support zone. If you do get a chance to buy it at this price between 1700 and 1650, I think that would be a good buying price for a good short-term trade. So moving on to IOC, let's look at the all-time chart to see if there's any interesting thing happening here. Yeah, I don't see anything interesting at this point. It's a very slow moving stock. It makes very big up moves, very long down moves, and yeah, it's not really appealing at all. Mahindra and Mahindra. Okay, now this is looking interesting here. Let's look at the monthly chart to understand what's happening. Okay, so we can clearly see there is a resistance here, and this has been a resistance since August 2018. So it's a very long resistance, and before that this price was a resistance right here. Okay, so this was the resistance back in 2016. It broke out from here, went all the way up till here, took resistance here, and then there was a very nice and long drawdown that happened, a very big correction. The correction was for 72%. Wow, the 70% correction that happened here. This resistance, which should have ideally acted as a support, was decisively broken in Jan 2019, and then the stock just kept moving down. Now the same resistance, which should have acted as a support, became a resistance over here in December 20. This was again decisively broken in February 21, and since then it consolidated here at this price point, and it has been trying to ever since break out from this 2019 resistance. So if we switch over to the daily chart, let's look at some moving averages here to try and find some support. So I think it is at a very good support zone right now. This price point, this 830 and this 750 rupees does look like a solid support zone to me. And if you were to get some targets here, because you have to understand that this looks very much like a cup with handle to me right now. So if you are to connect this and this would become your cup, and then this is potentially the handle which is forming out here. Yeah, this looks like the handle which is forming out here. So you can either keep the handle this way or you can keep another curve as the handle. Right now this is what I'm seeing, so this is what I've drawn, and the technical target comes to about wow, this is a very nice target that we are seeing here. Now this is getting me excited. Okay, so we are seeing a target of 1721 rupees, which is a 75% gain above this neckline. Now if you are a conservative trader, the best way to trade in the stock is to wait for the breakout to happen above this line and then enter it, because you get a confirmation that uh, the price has decisively broken the resistance and the downside becomes limited, and you also establish a new support zone over here. However, right now this stock is very close to a very important support zone, right? The current price is away from the support zone only by 10%. If I were to wait for this breakout to happen, then this very strong established support zone goes down by 23%. Now, I like taking a little bit more risk. I don't mind taking this risk of buying this stock right away tomorrow and holding it. So I'm going to add this to my tracker and mark it as an active trade. And I think this is a very good price to buy, because the risk to reward ratio from this price point just improves even further. Because if you were to buy this tomorrow at this price, you can get the stock, you can get potential gain of 100% plus. So let's note this down in a tracker. So that's M, sorry. Okay, date of identification is 6th Feb. The price as of today is 841.70. Potential cup with handle pattern. Very close to strong support. Great risk to reward ratio. All right, perfect. So the target entry price, I'm going to keep it same as today's price, because this is the price that I want to enter at. The target that we had identified as per the technicals is 17, what is this, 1721. Let's keep it as 1720 for simplicity. So the target is 104%. The stop loss that we would keep in this case is this price, which is 750. So I'm going to keep 745 as my stop loss. The potential loss is about 11.5%. This trade is active. So the current market price, I'm going to keep that tomorrow's buying price right here. That's this formula over here. Yep, there we go. Okay, so let's see, from tomorrow we are PNL will start getting updated. Okay, great. So M&M looks like a very, very good buy to me. Let's go and have a look at the fundamentals also just once. Wow, I see this. The industry P is at 293 right now. That is strange. Okay. Anyways, so the current price is 842. Debt to equity is pretty high. So it's okay. Look at the sales. Okay, we don't have any December quarter results, but the September quarter results are decent. They have been doing 20,000 plus crores consistently, except for June. That's okay. The margin was very good. Since we don't have the latest quarter results, I don't want to give too much importance to September results. However, this is the highest net profit that I am seeing since December 2018. So this is a really, really encouraging sign here that things are improving. The trailing 12 months is also north of 4,000 crores, which is good. This was only done twice in the past, back in 2013 and 14. So this is great, but clearly, you can see that there's something wrong with the tax, because there's 52% tax compared to just 35 and 26% here. So I believe if this taxation percentage comes down, you would see a better profit margin. Let's look at the shareholding pattern. Okay, so the FIIs have reduced their stake in the September quarter, but the stake has been maintained in December. DIIs have been pretty much consistent for the last 5 quarters. The public shareholding has gone down. That's good. Promoter has gone up very slightly from 0.45, it's moved to 0.46, and then here 0.47. Let's just open up and see. So this investor has increased their position. So has Government Pension Fund Global. Even Vanguard has increased their position. Kuwait Investment Authority has reduced it slightly. These guys have completely gone off, and these guys have also gone off since the June quarter. So good positive signs is that there are FIIs who are increasing their positions. There are just a few of them going away, which shouldn't really affect our trade opportunity, because if the technicals are supporting the share price, then that's what's more important. We can also see this NPS Trust, SBI Pension Scheme, has taken up a good position here in the last quarter, which is good. So overall, fundamentals look solid. Shareholding pattern also looks very good. I think this is a brilliant chart setup to go for. So let's see what happens. Now moving on to the next stock, which is DABUR. Okay, DABUR has again seen a good correction here, a good time for long-term investors to enter. I don't see any trading opportunity. NYKAA has been in a deep correction, and all the tech stocks, all the overvalued tech stocks are correcting massively. So at this point, I think NYKAA is a avoid. Godrej Consumer Products has seen a good correction. So again, this also looks like a good time for long-term investors to enter into the stock. SHREECEM. I can't see any great chart pattern here to take a trade on. This also, I think, doesn't look like a trading opportunity right now, so just skip this. DLF. Okay, this volume that we are seeing here is pretty interesting. Let's try and look at some long-term charts and see here. Wow. Okay. Okay, now this is really, really interesting. So if we look here, March 2011, this has been a resistance, right? So this price was tested in March 2011, was again tested here in Jan 2013, was again tested here in December 2017, and then again tested in December 2019, and it was finally broken in February 2021. There was a retest again, and then it was decisively broken in the month of May. So that is a very good sign. This is a very, very long consolidation that has happened in the stock, and now it is consolidating near this resistance line, which it has been facing since the year of 2009. So it's just consolidating below this resistance line. So I believe this chart is on the verge of a breakout from here. And if it does, then your next possible target becomes this candle, which is the previous swing high of this green candle here. So 738 looks like the next logical target. So now let's try and identify what would be an appropriate stop loss. So we are going to look at the weekly candle for a stop loss because there's such a long consolidation period behind this, and because you can see that this chart takes its time to move up with significant periods of consolidation which last between 3 to 6 months, we will have to keep a much more longer term view here. So we will use weekly charts as a stop loss, and right away you can clearly see that there is a pretty strong support at this price. So this is definitely a strong support, and if we switch over to the daily chart, we can also see that it has been facing a resistance this way. Let's switch over to weekly chart and we can see here better. So this is a clear downward resistance line that it's facing. So this does look like a great opportunity to me to enter into the stock, and the logical support would actually not be this line which has this price point which it has been testing. I think the best support would be here, which is this resistance line. So this was the previous resistance over here, which should now act as a support. And why I believe this should not be considered as a support line, because there is something called as stop loss hunting that happens in the market, right? Where certain people push the price down below a certain price, and they trigger the stop losses of people so that a lot of volume is generated and they buy up the shares and take it back. So I believe if you want to avoid being stop loss hunted, you should keep a little wider stop loss and not be afraid until this line is broken, because this looks like a more solid support to me. Let's go and look at the moving averages also and see if they support this price point here. And yeah, as you can see, the 200-day moving average is creeping very close to this line itself. So I believe this zone should act as a very good support zone. So 360 to 350 should be a support zone. If it closes below 350, that's when you have to be concerned. And our buying price would be above it has to break out from this downward trending channel. So our buying price has to be above the previous swing high, which is this. So I think this candle is high. For a more stronger confirmation, we can wait for it to cross 425, and then this would be our buying zone where we can enter the trade. So let's quickly note this down in our tracker. So the current price is 399.50. 10-year long consolidation breakout. Good risk to reward. Available close to support price. Okay. So our target entry price will be 425. Our target that we had calculated was 736. So your profit is 73%, and our stop loss, which we had decided here, is okay. Wait, since we would be entering here and not at the current price, so we'll have to move up our stop loss a little bit here. Okay, so I think we'll have to keep a tighter stop loss because if it breaks out from this trend line, ideally it should come and retest this trend line. So we'll have to give it that much room to breathe to retest it. So I think then in that case the logical support, let's try and see if we can do some volume analysis and understand if we can get some logical support. So we're going to be using something called as fixed volume range. So if I look at this range here, no, sorry, this is not showing up what I wanted. Anchored VWAP. Okay, let's look here. All right, now what I've used here is something called as anchored VWAP, and what this is telling me is the average price on the upper side, on the lower side, and of all the shares that have been traded since this breakout candle. So from 22nd September till Friday 4th of February, this is showing me the average price of every share that has been traded. So on average, since this date till February till Friday, the average price of the stock has been 405 rupees. On the lower end, the average price has been 384. On the upper end, the average price has been 422. So I think 384 on the lower end looks like a very solid support. If you would like to know more about how to use anchored VWAP, then please put a comment in the comment section below and I will make a separate video on how you can use the anchored VWAP. Okay, so 384 looks like a decent support to me. So we're going to note that down. So the risk is 9.65%. The gain is 73%. Great odds. Okay, so we are going to be waiting for entry in this case. All right. Okay, so the moment the current market price crosses this target entry price of 425, we will enter into this trade. Okay, moving on to the next stock, which is BAJAJ-AUTO. All right, BAJAJ-AUTO. All right, something interesting is happening here. What I can see here is, let's switch over to the monthly chart. Okay. So there is a beautiful upward resistance line, right? It's taken resistance over here multiple times. So it's taken resistance here, 1, 2, 3, 4, 5, 6, and then 7. So it's taken a resistance 7 times on this line, and every time it falls back down. Now the current price of the stock is at a very good support level again, because this price 344 was a resistance here. The resistance was broken, it created a new resistance, and now this resistance should act as a strong support for the stock. So if someone wants to take a trade for a very short time frame, say 3 to 6 months, I think then this is a good trade to take. It's a nice, BAJAJ-AUTO is a very nice company. You know, the downside would be extremely limited here, so you can keep your stop loss as per your risk profile. And you know, you could take this trade for the upper side of this boundary, so you can potentially look at a 25-26% gain in this stock. Again, this doesn't excite me personally because it's a very small gain, 25%, but this is a very safe bet that you can definitely take. Bajaj Auto is a nice safe stock. If you can make this return in a span of 3 to 6 months, nothing like it. I'm going to add this to our tracker. Keep 6 Feb. That's the date of identification. The price as of today is 3565. Sorry, 3565.35. There's an upward resistance line that we have identified. And the current price is at a good level. And our stop loss would be right here, which is 3319. So we can keep the target entry price. Let's see if we needed to cross a particular level. No, this looks like a good price to enter as any. So we'll keep 3565 as a target entry price. Our upward target as per the resistance line comes to about 4580. For simplicity's sake, I think we'll keep it 4500. So the potential gain is 26%. The stop loss will be, as we had decided here, 3319 is what will be a stop loss. So the potential loss is 7%. I'm going to mark this trade as active. Buy date for tomorrow as 7 February. Okay, so a good short-term safe trade for some quick gains. Let's move on. Let's look at Coal India. Coal India, there is nothing happening whatsoever. SBICARD looks to be in a correction phase. It needs to give a close above this swing high of 941 for it to turn bullish again. So at this point, there is no trading opportunity that I can see. HAVELLS was in a very good multi-year uptrend from 2009, but then that changed into July 2019. Then it went for a nice correction, and then again after the COVID fall, it went for a very nice, long bull run again. And ideally, it made something called as a pole and flag. If we let's try and test out our skills here. So this is the flag. That we're seeing. Zoom in, and this is the pole and this is the flag. Now if we pick this pole up and we put it at the bottom of the chart, wow, so it exactly went and hit this target right here. So it exactly went and hit this target, went even a little bit above that, and then it has taken a resistance and it's correcting again. So it made a good pole and flag pattern here. We can't say that it made a similar pole and flag again because a breakdown has happened right now. It's a good time for long-term investors to invest. but I don't see any trading opportunity right now. But this is definitely a very good price for long-term investors to invest because it's corrected quite a bit over here. And this is a good 25% correction. So if you're a long-term investor, you should definitely start accumulating the stock. Britannia, again, a good FMCG stock here. Just look at this 2014 bull run. Wow. Every single month it was giving a return. I mean, this is the kind of stock that you dream of, right? Just look at it. If someone invested in the stock in April 2014 and just held on to it till July 2015, so in less than what 13-14 months, you would have made 262%. Just brilliant. And if you look at the monthly chart, on the monthly chart you can clearly see again a pole and flag pattern, right? um, so this is your pole. Let me zoom into the chart a little bit for you guys. This is the flag that you can see forming here. So it's sort of looking something like this flag, and then this was broken out over here. So let's see if our technical analysis is working. Now we take this pole and we put it at the bottom of the flag, and again, that's the beauty of technical analysis. It had exactly hit this level and it took a pause and then even went beyond it. So wow, just wow. So, let's see if we can do a similar analysis here again. So if this was your pole and then it went into a sideways consolidation here, you pick this up and you put it here again, boom, the same price. Anyways, this is a good stock to again accumulate for the long term. This is not a stock to trade in. It has corrected again quite a bit, so very good time for long term investors to enter into the stock. PAYTM, clear avoid. It's just been on a complete downtrend since it has been listed. It's 50% down. So yeah, just stay away from it right now. We will see if something bullish indicator comes up over here. Siemens, wow. So Siemens is in a good strong uptrend if you look at the monthly chart. So it goes up very strongly for a couple of months, consolidates over here, then again went up, then a downward consolidation, again a big up move, again a 3-month consolidation in this zone, again an up move. Now it's again looking to move up. But I am not able to understand what would be our potential targets here in this case, and it seems to be a very volatile stock because it makes large up moves and then large down moves as well. So I would personally not be comfortable trading in the stock. So I'm going to avoid it. So let's move on to BPCL. Yeah, nothing happening over here as well. Let's go to Dr. Reddy. Okay, so we are looking at the monthly chart right now, and as you can clearly see, Dr. Reddy had a resistance here back in 2015, which was decisively broken in July 20. Then there was a retest that happened the next month in the month of August, and then there was a very nice up move over here in the month of September. However, since then it has been consolidating in this box over here since a pretty long time now. Here, this is our range where it has been just consolidating for the last how many months? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. For the last 18 months, the last 1.5 year, this stock has only been consolidating. So there has to be a very strong, clear breakout above this box because this consolidation is happening at its all-time high level. So clearly the stock is in no mood to go down from here, and if you are a very short-term trader, what you could ideally do is the price is currently at the very bottom of the box. You can just buy it and sell it at the top of the box again. You could probably make a 26% gain here in a span of what, 2 or 3 months. But if you want to go for even bigger targets, you could ideally, but if you want to trade on a breakout, then you can wait for the stock to break out from this range, and your potential target will be the top of this range and bottom of this, sorry, the bottom of the range and the top, and just put it up over here, and this could be your next target. So that's a 23% gain from the top of this consolidation range. So again, this would be a very short-term trade, would probably last for only 1 or 2 months. So it's a good safe trade. Dr. Reddy is a good company. So it's consolidating right now. You can either do a range play over here and just buy at the bottom of the range and sell at the top of the range, or you could wait for it to break out and then buy it for this target. So I'm not going to add this to my tracker because I look for more long-term trades which I can hold for a couple of months. I do not look for short-term trades, but this is definitely good for someone who is looking for short-term trading. Let's see this in the daily chart, and if you look at the moving average, the 50-day moving average should sort of be, yeah, it's the 50 and the 100-day moving average are in a downtrend right now. So it is at the bottom of the range. So your stop loss would be this bottom, obviously, and then you buy it here and you sell it on top. Extremely simple strategy. Let's move on to ICICI Pro Life. Yeah, nothing happening over here. It's in a clear downtrend, so no reason to look further into the stock. Let's look at Mindtree. So Mindtree has corrected quite a bit. It's made a very nice arch over here, which is not a really good sign in a bull trend. It needs to give a closing above 4139 to turn bullish. So as of now, I don't see any trading opportunity. Indigo, again, nothing much happening here on the weekly chart. It's a void. Okay, Cipla again also seems to be consolidating just like Dr. Reddy in this box. So there needs to be a breakout above this box for us to enter into the stock. Only then we can decide some target. And your first target will obviously be the range of this box itself. So this box is, the range is coming to 17%. If you were just to move this up here, this gives us a 15% target. Again, this would be very short term. 15% for the stock would not take more than 2 or 3 weeks, as you can see here, right? Just 4 weeks of continuous uptrend, and you could hit this stock. You could hit this target. So let's go to Berger Paints. Berger Paints again has been in a multi-year bull run since March 2014. So I don't see any trading opportunity as such, but if you are a long-term investor, this is not a bad time to start accumulating the stock. It's available at a very good price right now. I believe it should be very close to its 200-day moving average. Yes, it's under its 200-day moving average. So this is a good time for long-term investors to invest in the stock. Let's go to Ambuja Cement. Okay, now this is looking really interesting. Okay, let's look at the monthly chart here, because I believe Ambuja Cement is going to be in a very, very long uptrend, looking at the chart pattern that I'm seeing here. So this is your flag, and this is a flag on a monthly chart, so this is not going to be a short-term trade. Okay, this is a flag here that has been forming since 1, 2, 3, 4, 5, 6, 7. 7 months. This is the 7th month where this flag is forming right now. And this is the pole that we're seeing. Now, if we were to move this pole to the bottom of the flag channel right now, the potential target we are looking at is 630 rupees. So here is our target. Now, when will we enter this trade? We will enter this trade after there's a breakout from this flag, obviously. So we are going to have to wait for the stock to close somewhere above 410. Only then we will get a bullish confirmation. So 410 will be our target entry price, and then we will be able to take a trade in this. So this will be our target entry price. Let me just thicken this up a little bit, change the color. Okay. So I think this is a fantastic stock to trade in. Let's have a quick look at the fundamentals here to see if the fundamentals support this technical bull run. So company is almost debt-free. Debt-free. Stock is providing good dividend, healthy dividend payout. Okay, don't really care about any of that. We again don't have the December results here, but the September results seem decent enough. Okay. If you look at the profit and loss statement, the revenue is highest ever. The net profit, the trailing 12-month net profit is also the highest ever, and last year's net profit was the highest ever as well. So that's a very good thing. If we look at the shareholding pattern, FIIs have reduced their stake by a bit. However, the DIIs have increased their stake again in the same proportion. The public shareholding is under 10%, which is a good thing. Mire Asset Large Cap Fund has entered into the stock, so that's a good thing. Also, one interesting thing that I'm seeing here is that this stock has been facing a resistance from this price since February 2015, right? And in February 2015, if we look here, let's see, December 2015, what were the results? Here, December 2015, in the profit and loss statement, the net profit was 800 crores. Now the profit as of December 2020 is 2365 crores, and if you look at the trailing 12 months, it's 322 crores. So the profit has increased 3 times. But the share price, if we look at it from this resistance line, has only moved up by 33%. So it's not moved up a lot actually. So I do not see why this target cannot be achieved in a very short span of time. I think 63% is just the first target. I think this chart is going to go much beyond this, but 64% seems like a superb first target for us to go after. And our stop loss in this case would be the bottom of this trend line. So if this trend line is retested and broken, then that will be a concern for us. So we will keep 370 rupees as our stop loss in this case. So let's quickly add this to our tracker. I hope everyone understood why Ambuja Cement could be a huge potential trade for us. Could be a huge mighty trade for us. 380.40. So pole and flag pattern, solid fundamentals, yeah, that was it. So what is our target entry price? Our target entry price will be 410 rupees. Our target is coming to right here, 629. Let me move this. Okay. Yeah, so 629 is our target. So potential gain is 53% from the target entry price. Just this here, there we go. Our stop loss will be we decided that would be 370 around, if I'm not wrong. The stop loss is 10%. We have to wait to enter the stock. Once that flag and pole breakout happens, then we will enter into this trade. Super. So that was my view on Ambuja Cements. I think that's a great chart. It's a great opportunity. Really excited, just waiting for this breakout to happen now. Let's move on to Apollo Hospitals. Okay. Wow. So this stock has clearly run up a lot. It's in a correction phase right now. It's corrected by about 20% already. So you have to wait and watch at this time. There doesn't seem to be any trading opportunity. Oh my god, Naukri has seen a massive correction right here. So yeah, there's a clear downtrend resistance that this stock is facing. So until unless this resistance is broken, there is no trading opportunity at this point. Let's have a look at SRF. Fantastic chart setup, great stock. I think it's made something of a saucer pattern right here, and as per this pattern, if you were to consider this as the neckline, the target would come over here. So let's draw this neckline right here. So there was a breakout that happened, but I think with the whole US market falling, with Facebook falling and with Netflix falling, it impacted our market also, and then now it is retesting this level. But from the current market price, you could potentially take a nice short trade for 18%, while keeping your stop loss as this level, and your potential loss will be 6%. So again, I look for larger time frame trades. I don't look at small trades such as this. So if you're a short-term trader, I think this is a good risk to reward opportunity. But I personally am not interested in this trade. So moving on to EHO Motors. Okay. Alright, so currently the stock is consolidating here, and there seems to be a slight sloping resistance that's facing. Let's change this to weekly candles and see. Okay. So here is the clear resistance that we can see here. So it needs to break out above this line, only then we can see some momentum, and if it does break out, then the next target will definitely become the all-time high. Right now there is no opportunity to trade in this. We need to see a good breakout happen over here. Moving on to Tata Power. Okay. Alright, Tata Power is very close to breaking out from its all-time high. Now what are the targets that will come? I am not too sure, but I think this is a good portfolio stock. I think you should hold it for long term. There's a lot of things that is happening in the Tata group, and with the whole electric vehicle thing with Tata Motors, etc. I think Tata Power will be a big beneficiary in this whole space. So if you're a long-term investor, I think this is a good time to start accumulating small quantities of Tata Power. If you get it, ideally you should have bought it at this zone, but if you haven't already, I think it's very close to a breakout right now, and you could see potential up move. So whatever you're planning to buy, let's say if you're planning to invest 5 lakh rupees, I think you should start putting in like 50,000-60,000 rupees every month in Tata Power. Again, this is no buy or sell advice. Please do your own due diligence. This is just my view, what I would have done in Tata Power. Just a disclaimer, I already have Tata Power in my portfolio, so just putting that out there for you guys. Motherson Sumi, huge gap down of 20%. Clearly something's happening in the company that we are not aware about. Let's look at the fundamentals to see if there's any change fundamentally. So in this channel or in this video, we are not just going to discuss stocks which can go up. We are also going to try and find why stocks are going down so that we understand what's happening, and that will sort of help us build a view of the market. So which is why I'm even going and looking at the fundamentals of stocks which are going down, even though we don't really need to discuss that. But this is for my own knowledge, and I hope that will help you guys as well. So if you look at these September results, let's look at when this happened. This fall came in Jan. Okay, so nothing's really changed. I mean, the September results were not that great. The sales came down, but if we compare it year on year, then also the sales have come down. So that's not a great sign. The operating profit margin is close to its average. Nothing really changing in the quarterly results. Even these seem to be stable. The borrowings are going up quite heavily. I mean, from 6,000 to 10,000, and now from 10 to went up to 11 and a half, from 11 and a half to 13, came down to 12, and now it's again gone back to 12,300. The FI holding is pretty stable. DI holding is also stable. The public holding has gone down. Not really able to understand why the stock price is moving. Maybe there's some news that we are not aware of. I don't really read news websites. I try and avoid them because they really cloud your judgment. But technically the chart is weak for sure. We'll have to wait and watch what happens. But right now this is a pure avoid. Let's look at IndusInd Bank and okay. Let's see. So it's made a double bottom over here. If you look at the weekly chart, we'll be able to see the double bottom more clearly. Yeah. So you see here, this was one bottom that it made over here. This is the second bottom that it made over here. It's a little lopsided, but it's a double bottom. And it is most likely going to break out from this previous swing high of 22nd November. And if I remember correctly, they came out with the results last week, which were very good. So I think that has brought a lot of positivity into the stock. So this is a good trade for short term. I mean, there is nothing stopping the stock from going to the previous 52-week high, which is a good 30% gain. And as for your stop loss, the stop loss would be 916 for me. This would be the logical stop loss that I would keep. 916 with these two doji candles over there. This looks like an appropriate stop loss. All right, let's add this to our tracker. I think this is a good chart setup. I think the results have brought in some good positivity. The risk to reward ratio is good. 30% is a good risk to reward ratio. And even though I said that I like taking trades which have 40% above, sorry, which have a gain of 40% and above, I do believe that this chart can achieve this target very quickly. I think it can achieve this in a span of 3 to 6 months. So keeping that time frame in mind, I think this is a very good chart setup. Usually for gains worth 40%, you are looking at 6 months or more. But since we are getting a close to 40% return here, a 30% gain in a short time frame, then it's not a bad trade to take. So 956 double bottom is what we identified. Close to breakout. The target is all-time high. Okay. So what will be our target entry price? Let's see. So it needs to cross this previous high. So that's 980. And our target will be this, which is 1240. So the gain from our target entry price is 26.5%. Our stop loss will be this 917. 917 will be a stop loss. So again, sorry, potential loss 6.5%. Not bad. So we gotta wait for our entry to come in, and then we'll be able to enter into this trade. Great. So we have identified another 6 trading opportunities till now, out of which 2 we can action on in the very next week itself. So that's fantastic. All right, great. So I think we are done with our time, guys, for today. I hope you all enjoyed watching this video. I hope you all got to learn something new. So we are closing this episode with IndusInd Bank as our next episode. Sorry, for this episode. The link to the Mighty Trades positions will be linked into the description box. Please go ahead and check it out. And I will also mention which charts I have analyzed in the description box as well. So anyone who is watching this video, you can clearly go and see which charts are there, and if something interests you, then you can skip to that timestamp. I hope you all enjoyed this. I hope you got to learn something. Again, repeating myself, please view this as an educational video only. Please do not treat this as any buying or selling advice. And have a good night, and see you next week.